Welcome, everyone. Thanks for taking a moment to take a look at our newest offering at 823 North June Street. My name is Matt Heinz. I'm the Director of Investor Relations here at RCF Development. We're very happy to bring to you this offering, which is located in Hancock Park. And the default page that you are taking a look at, it comes up with a gallery of images, and it's beautiful, beautiful. Look, that's what we've become well known for. We always develop modern, high quality luxury buildings, and that's part of our core thesis. We find that allows us to charge premium rents and experience minimum vacancy. But if you take a look here, you click on map, you can take a little bit of a deeper look into the Hancock Park neighborhood. If you're a Los Angeles native, or if you've spent time in Los Angeles, you're probably familiar with Hancock Park. It's conveniently located in Hollywood. It's got easy access to downtown. It's got easy access to all of the West Side, Beverly Hills, Santa Monica, etc. It's a beautiful location. We're very, very happy and excited to develop this particular property. I wanted to take you on a little bit of a tour. I'm going to go through the financial details and investment summary and all that kind of stuff. But first, let's talk a little bit more about RCF Development. So RCF Development has over 10 years of a track record developing properties. We focus on Los Angeles. We are happy and have developed a very strong expertise in building multifamily properties in the Los Angeles neighborhoods. That's what we know, and it's what we excel at. And in just over 10 years, we've become market leaders in this particular area with a reputation for delivering projects that are on time and on budget. As always, our construction partner is Ocean Construction. So if you take a look, and if you're interested, at oceangroupca.com, you can find out a little bit more. And RCF Development founder and principal Richard Francis is also a partner in Ocean Construction. And that is one of the core advantages. We are a vertically integrated organization. We are going to handle the development. We're going to handle the construction with our partners at Ocean Construction. And we're also going to handle the property management. And in our experience, that type of vertical integration allows us to minimize execution risk. We are always going to deliver projects that we know how to do, quite frankly. If you take a look at Ocean Construction, you find out a little bit more about their projects. They have a deep expertise in developing restaurants. Chances are, again, if you live in Los Angeles, or really, frankly, anywhere in the United States, you've eaten at a restaurant that was developed by Ocean Construction. They've developed, I think it's over 200 restaurants and many familiar names. They also have a deep expertise at developing multifamily projects. As always, if you are interested in learning a little bit more specifically on the development and construction side, please feel free to contact me. We have worked with many people that want to learn more, and once they visit our projects at Plymouth, our projects at Van Ness, any of our multifamily projects inside of our portfolio, when you take a look and when you can visibly see the quality of the construction and the neighborhoods that we are very, very selective. We're not looking to develop 1,000 properties, and we are selective. And that kind of discernment allows us to make sure that they're always going to be attractive, and that leads to premium rents and the lowest possible vacancy. So please feel free to reach out, and I'm happy to take you on a tour and you can kind of touch and feel some of our work. So if we go back to the investor portal, there is over on the right-hand side, we have an Excel sheet that goes through some of the financial projections. And again, these are pro forma, they're projections. This is based on our experience and based upon our expertise, what we believe the financial performance of this particular property is going to look like. We also have the June offering memorandum. And so I'm going to bring that up. You can click on that, download that, and it's going to walk you a little bit through kind of the almost the one page, although it's not one page, but what we might call the one pager on this particular property. So we have the current offering of June. If you click on the thumbnails on our investor portal, there's also another offering that is on West. Okay, so we have June and West right now that you can take a look at. And I'm scrolling through the financials because that's one of the purposes of this video. I'm going to go through them in greater detail for those of you that are so inclined. In the offering memorandum, it talks about some of our current projects that are also underway. This one's at 1348 South Burnside. You can start to recognize the very strong modern aesthetic that we always favor. So, for example, here at Burnside, it's four townhouses. We have rooftop terraces with views of the Hollywood sign, and just beautiful. So that is currently underway. This is a completed project. So this one is at 1245 South Plymouth Avenue. It's 100% leased with gross annual rents that make it very attractive, both on a cash-on-cash basis and as well as an investor IRR based upon some assumptions about our holding period. Here's a completed project at Van Ness. And so you start to recognize the RCF development aesthetic. We work with architects that appreciate beauty and appreciate the importance of design. Okay, so you can take a look there. What I'm going to do is just take a minute and go through some of the financials. So let's see. I think that would probably work better if I do that. So if we start with some assumptions, we are at June, we're going to build a 4-unit development. And the monthly gross rent is $6,000 per unit. As I mentioned before, this central mid-Wilshire type of area between Hollywood, between downtown, that's our breadbox. That's what we tend to develop in. That is a conservative estimate as far as rent goes. If you live in Los Angeles, you probably are nodding your head. Yeah, I think, that actually if it's really high quality construction and has lots of amenities, we could see where it could be significantly above that. If you're not from Los Angeles, you're probably saying, oh my goodness, look at those rents. But yes, that is the city of angels for you. Here we have some pretty standard assumptions in terms of vacancy allowance and maintenance. And we have our property management at 5%, fund management 3%, so there's a total of 8% fees, property taxes, insurance, etc. What you will notice is, I'm going to kind of jump a little bit, but when you go to the financial analysis, one of the things, if you take a look at the potential gross income as opposed to the net operating income. So if I do 286 divided by 288, it's about 70%. That's pretty standard. We find that on new construction that's built with high quality, where you in the early years you have fairly low maintenance expense and whatnot, our net operating income is generally in the neighborhood between 28, 29, maybe as high as 31% expenses. So, if you have 28 or 29, or let's just say 30% expense, about 70% flows through to net operating income. And that's pretty typical. That's what, most of our lenders will use as an assumption, some kind of a range between 28 and 32%. So pretty standard as far as that goes. Going back to our assumptions, we will typically obtain an interest-only loan at the end of construction. So we have somewhere between 16 and 18 months of development and construction by the time we get our permits, break ground, open our doors. The construction financing is generally going to be financed with one of our partners at Genesis, which is a division of Goldman Sachs, with Finance of America. And then at the end of that, we will go to a lender such as Capital One. And in today's climate, we've been able to obtain interest-only loans at actually rates below 4.25%. But we don't know what the interest rate environment is going to look like in 16 months or so. So we used a conservative assumption of 4.25%. Again, interest-only with a 30-year stated period, but our holding period is significantly below 30 years. So that's not all that important. If we go to our project budget, we've already acquired the land at this property, 823 North June Street, at a cost of $1.65 million. We have soft costs, which are going to include architects, legal, organization, interest expense during construction, things of that nature. So we have our soft costs. Construction costs works out pretty favorably at about $275 per square foot. That's very reasonable, but again, we have a wealth of expertise and feel quite certain that we can deliver at that square footage. But of course, there might be a little bit of an overage. There are always some unforeseens, and sometimes those unexpecteds go a little bit better than you had hoped, and sometimes they go a little bit worse. So we have a contingency that's roughly 10% of the construction budget. So our total all-in cost in terms of land and construction on this property is $3.8 million. So let's get to our capital stack. So if we take a look at our capital stack, what we're looking to raise in this particular round is $1.35 million worth of equity investment. RCF Development, as the sponsor, is going to contribute 10%, about 10%. And so over here, you can kind of see our calculations in terms of how the capital stack is structured. That wasn't that bad, but I can't show